Matt Walsh and Nick Carter are partners at Castle Island Ventures. All views expressed by them or the guests on this podcast are solely their opinions and do not reflect the opinions of Castle Island Ventures. Guests and hosts may maintain positions in the assets discussed in this podcast. You should not treat any opinion expressed by anyone on this podcast as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of their personal opinion. This podcast is for informational purposes only.
Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
The federal government loans American International Group, AIG, $85 billion.
This is a different kind of market, and the Fed is asleep.
The federal government is stepping in to stabilize Fannie Mae and Freddie Mac, the two mortgage giants that have been threatened by the housing crisis.
The Bank of England has pumped £75 billion more into Britain's ailing economy with a new round of quantitative easing.
You print a couple $1 trillion, and all of a sudden, people start to worry. So out of this worry, we have something called the Bitcoin.
Welcome to On the Brink. I'm Matt Walsh.
And I'm Nick Carter.
So I just went to my first baseball game in 3 years.
How was it?
It's terrible. Red Sox are awful. It's actually an embarrassment to the city of Boston. So I was with a portfolio company at their summer outing, and I left after the fifth inning. Red Sox gave up like 7 runs in the first inning. It was embarrassing to watch.
The baseball, I don't understand why they call it America's pastime. I find it to be tremendously boring. At least that's kind of exciting in a way.
Yeah, I mean, there was a lot of runs being scored. Baltimore Orioles are awful, but they were crushing the Red Sox.
The one baseball game I've been to in my life, I think ended 1-0.
Oh, was that the one I went with you?
Yeah, we went with our lawyer.
Our lawyer. And then I remember you turned and you asked him, see that big green wall over there? Does anyone ever hit it over? And he said, yes.
That's absolute slander.
Indeed.
I'm sorry. That's completely made up and slanderous. I know enough about baseball to know the answer to that question.
Sometimes people do hit it over that big green monster.
That's just a completely made up story. And you've said it to a lot of people over the years to humiliate me. And it's just not true.
I have a very specific recall of that. It's like, hey, does anyone ever hit it over that wall?
Absolutely false. Absolutely false. And also a very boring game. So that was it for me in baseball.
I think I'm all set on the Red Sox until they can actually put a good product on the field. It's actually really a problem.
Now, you haven't changed your mind on the World Cup. You're not planning on attending.
I've had like 3 or 4 Zoom calls this week that start with people talking about the World Cup as if I actually care about the World Cup.
We operate in a global space, Matt, and it's the #1 sport. And you owe it to yourself to learn a bit about it.
About soccer?
Yeah.
Yeah. About how it works?
I can give you some talking points if you want.
Okay. Yeah, what do you got?
I would say the thing about Arsenal is they always try and walk it in. You say that to someone?
Okay, but Arsenal's not playing in the World Cup. I know that much.
Actually, a lot of people mix that up. That's a very astute observation. If you want to sound smart, I would just say France are probably your pick. France or Spain.
France, okay. Yeah.
And then say England on a skill level should compete, but they just don't have the psychological ability to win a game.
Okay.
In the knockout stages. So say something like that.
It's a good talking point. A lot of people asking me if I'm going to this upcoming conference, crypto conference in France. Like, no, I'm not a crazy person.
That's just a death wish. There is a scandal with the World Cup. Have you followed it, though?
No, what's that?
So FIFA, I would say, is maybe the most corrupt organization on the planet. Mm-hmm. Possibly the #1. And they have been doing this artificial scarcity thing on the tickets. So they didn't unlock all the tickets in an effort to keep prices high. It's like some kind of like a crypto scheme that they're running.
Oh, I heard about this. Yeah.
They didn't sell the tickets. And now with like a week to go, they're unlocking huge tranches of tickets because they couldn't sell all of them out.
Yeah. So the secondary market's getting crushed, right? I know some people up here that bought tickets thinking they would flip them, and now they can't.
Yeah. So, I mean, because it's like Curacao, Ivory Coast is like $2,000 floor price. It's like, why?
Yeah.
I mean, insane. So they tried to basically scam everyone with the tickets, and it didn't work.
All right, so that was talking soccer. Should we hop into the deals of the week?
Yeah, first up, we have Coin1. That's a South Korean crypto exchange. There is $106 million from OKX Ventures and Korea Investment and Securities.
Then it's Signal Plus, which is a crypto options exchange. They raised $50 million from Hashkey, Blockbooster, and AppWorks.
Blockbooster, not to be confused with the video rental store.
I've never heard of Blockbooster.
Blockbooster. Then you have Wasabi Card. That's a stablecoin powered card company. There is 10 million from Avenir Group and Vernal Capital.
KeyRock, which is a digital asset trading company, they're reportedly going to acquire Blockfills, the corporate entity, for $3.25 million. This is the crypto lender that declared bankruptcy 3 months ago.
Helium Mobile. This is my headline of the week. Helium Mobile, this is a cell service provider built on top of the decentralized Helium network, was acquired by Andrew Yang's Noble Mobile.
What?
Andrew Yang, the Andrew Yang.
The presidential candidate, Andrew Yang.
That's right. So he is now a telecoms entrepreneur. I just found this out 5 minutes ago.
So Helium Mobile, that's not the main part of Helium, or is it?
I mean, I think that's a substantial part of the business, right?
So why are they selling that?
I don't know, but they have sold to Noble Mobile, and this is a real company. And apparently, I looked into it. If you don't use your phone, you get a rebate.
Really?
You get paid for not using your phone. Which is kind of like, well, kind of want to use your phone.
I don't really get that.
Andrew Yang, crypto entrepreneur.
All right. Next one up is Embed. This is a European payments company. They're acquired by OpenFX. OpenFX, we're an investor there. Just fast-growing FX wholesale liquidity marketplace. So congrats to both teams there.
Amber Data, a crypto market data company, was acquired by Kaiko, another crypto market data company. Really two of the longest tenured crypto data companies in the space.
That's right. Then we have Variant, a crypto venture fund. They raised $222 million for their new fund. So congrats to Jesse and team over at Variant.
And Falcon X, the crypto prime broker, has confidentially filed an S1 for a public offering last week.
All right, so let's get into the news of the week. I mean, big story is just the price of Bitcoin is just crashing right now. And a lot of people are saying it has to do with strategy. So what do you think?
I think so. I think that's it. Some people are saying it's a liquidity pullback thing. You know, people are trying to pre-fund their positions in the SpaceX IPO or Anthropic and OpenAI. I also believe that to a certain extent.
Yeah, I'd buy that.
Kind of like how, you know, when a tsunami comes in, the water pulls out first. But strategy has a lot to do with it, I think. I mean, they were basically the main buyer over the last few months of Bitcoin, especially with this stretch product. And they seem to have gotten themselves in trouble. I mean, stretch is trading at 95 cents on the dollar. I know it's not meant to be stapled to $1 or $100, whatever. But it's come off its par significantly. MicroStrategy spent down a lot of their cash reserve to retire, was it convertible notes?
Yeah, so maybe to set the table a little bit on that. So I think it was last week, they retired somewhere in the ballpark of $1.5 billion worth of the convertible notes that were due in 3 years. So they bought them back at a discount, but in doing so, they took themselves from 2 years of cash runway to, I think, like 4 months. And then on Monday...
To service the dividends. This is...
Yeah, to service... when I talk about cash runway, it's to service the dividends on stretch. Yeah. And then on Monday, they sold 32 Bitcoin, which is not a lot, but 2.5 million. And that really jolted the market, I would say.
That's their first sale since 2022. And of course, the story keeps changing. You know, it's, well, we're not going to issue stock above a certain multiple of NAV. Then they stopped doing that. They were meant to never sell Bitcoin, and now they sold a little bit. The idea was to inoculate the market. I don't fully understand the reasoning there. I think it was maybe to test how the market would react, and it reacted very badly. Very badly. Bitcoin is down to, oh my goodness, it's down to 63 as of today. Peaked at about 82.5 early in May, and the bottom as of yesterday was 61K. So just a massive collapse in Bitcoin.
So do you think that MicroStrategy is selling as part of this, or is this just people getting out of the way thinking that MicroStrategy will be selling?
Yeah, I think the whole game was just anticipating what strategy was doing, and the market was front running their purchases. That was humming along nicely for a while. then not only did they stop buying entirely, but they kind of started to position themselves as potentially net seller. On top of that, you have massive outflows from the ETFs.
Massive.
And I think that might be a combination of, well, people have lost faith in MicroStrategy's ability to prolong their buying activity because, of course, the common equity is not trading far above par, and Stretch is troubled, and the dividend coverage is not there. But I think that might actually be more of the story around these big IPOs coming up.
Yeah, I'm looking at the last few days. So yesterday, minus $396 million in the ETFs. Day before, minus 519. Day before, 483. I mean, massive outflows in the ETFs. I mean, if you're a large potential buyer of Bitcoin, why not just wait to see what strategy is going to do? And I'm a little surprised that Saylor hasn't come out and explained himself a little bit more in terms of why did you retire down the converts when you had 3 years to figure it out? Just killed your optionality.
It's a little bit confusing. I mean, I think the ultimate problem here is just if you zoom all the way out, if you are going to offer someone a 10 or 11 or even 12% yield, and nothing that you hold is yielding anything close to that. So Bitcoin yields nothing. There's no other real yielding instruments that they hold. That just can't be reconciled.
No.
I think it's very simple. So no matter how much financial engineering or trickery you do, the equation doesn't balance at the end of the day.
And even if, look, like Bitcoin goes up, call it 5% a year, you're really just betting on their ability to issue new either equity or debt to pay you that yield. So it never made a ton of sense to me in the first place.
Yeah. I mean, I understand that appreciation can sort of bail them out, but the problem, I think, is every dollar of STRC issued set senior to MSTR. And in my opinion, every dollar of STRC subtracts more than $1 from MSTR. Because it's a perpetual liability. And so why would you be an MSTR holder? Because if it trades above par, then you get diluted. They issue more. And then at the same time, there's this increasing stack of STRC sitting on top of you. So I wonder about the psychology of MSTR holders, and I just think, well, people aren't going to bid it up far beyond 1x MNAV any longer. But that was the core engine that funds this whole thing. And I just don't think that engine is firing anymore.
So what do you think Saylor does now? I mean, he's really depleted his cash. I think it's like 4 months of cash right now to service the preferred. You can either kill the dividend on the preferred, crushing the price of that. What else do you do?
Yeah, a couple options. So you can sacrifice STRC and just turtle up and just act like any other closed-end fund would do and just accept maybe you're going to trade at a discount for a while. He certainly could do that. Or he could sacrifice the common and keep STRC going. So he could raise the dividend, raise cash by issuing MSTR destructively, and keep STRC going and hope that resets things and hope that Bitcoin rebounds. I suspect that he's going to try and protect STRC.
Or he could sell Bitcoin, but then it gets pretty reflexive, right?
I mean, that punctures the whole story.
One of the side effects of that sale was the Polymarket controversy. Do you want to talk about that?
Yeah, so from one crisis to the next. Polymarket, man, what a mess. I mean, we've complained about UMA on this show before,
yeah,
I think.
We have.
UMA. So Polymarket had market MicroStrategy sells Bitcoin by May 31st. That resolved to no.
Even though they did.
They did. So that resolved wrongly. The trouble was the information regarding the sale was filed with the SEC on June 1st after the market had closed.
Yeah, it was filed on a Monday.
So the information required to settle the market to a yes was not in the public domain when it closed, and so it basically settled to no, and they kept it like that. And they added a note, actually. So they turned it into, from initially it was kind of a occurrence market and they turn it into an announcement market. A lot of people felt that was deceptive because it had traded as high as 60 cents on the dollar before it eventually settled to no. It also ran through the UMA market resolution process, which is very fraught. I mean, UMA is a crazy way to decide if something happened or not.
It's really insane that they do it this way.
I looked into it. The total market cap of UMA is $35 million as of today. So, and not every UMA votes on every market. So it's plausible that if you had single-digit $1 million worth of UMA, you can start to swing markets one way or the other. And now you look at the volumes of some of these contested markets, they're in the hundreds of millions, right? So now you get a big asymmetry where with a relatively small amount of money, you can swing a market potentially that yields you way more than the cost to get. I don't know if anyone's doing this.
Sounds like an Avi Eisenberg strategy.
It's like an Oracle attack, basically. I think you can't rule it out that someone might be doing this. This is not the first market that had a contested resolution. But I think the real problem here is actually not UMA. It's the Polymarket didn't specify the market very well. And then I went and looked at all the rules for all their competitors. Kalshi, CME, the Interactive Broker Events Market. Generally, they pre-specify a specific source, right? An authoritative source. And then they actually often add in latency.
Yeah.
So that you can collect the requisite data. So the market doesn't settle. It might expire, but the settlement is delayed. That's how you should have done it, of course. So I think Polymarket needs to completely overhaul the settlement methodology here. I think it's naive, and I don't think they have like lawyers writing the markets.
Don't you think the UMA protocol being the back end of this is a historical relic of the Gensler administration, where they just wanted to say, hey, we're decentralized and we don't actually operate this as a market, so don't come after us? And the real way to do this would be to just have someone at Polymarket arbitrating these markets.
100%. They should just have a team of lawyers that all day looks to codify markets appropriately and then settle markets.
Right.
That should be an internal function. That's how Kalshi does it, right? They don't outsource it to anyone. And I think, yeah, it was pretty well intentioned at the beginning. Polymarket, the on-chain element, the fact that there was this third-party oracle, also on-chain, token-based, that was elegant for what they were trying to do initially, which was to operate largely outside the bounds of U.S. regulation. But now they've come on shore.
Right.
You know, the Polymarket US entity is officially regulated by the CFTC. The market where this happened is the offshore market. But I think the UMA thing, outsourced resolution, is a total anachronism. I think they need to bring the whole thing in-house.
So in other news, somewhat related to strategy here, Tom Lee's BitMine, which is the Ethereum DAT, they had $53 million in purchases of ETH this week. They're coming out with their own version of STRC. It's a 9.5% yielding perpetual preferred. So he's just kind of running the same playbook as Saylor. Hopefully he doesn't get himself in trouble in the same way Saylor did. Kind of a weird week to do that.
Yeah, tough time to announce this one. Maybe slightly easier to operationalize with ETH as the underlying asset.
Well, they have yields embedded, maybe. I mean,
you could sort of argue that maybe ETH itself has yield, or maybe you can go and find ways to get yield using ETH. But it does suffer from the same fundamental problem. I mean, ETH itself is never going to pay 10%.
I think Saylor is going to be on the podcast circuit here the next couple weeks.
I don't know. I mean, he's going to have to do something to restore market confidence. People are really wondering if the jig is up here.
I mean, so you get a Bitcoin sell-off, you have this huge question on strategy. So they're one of, if not the largest current market participants in terms of their total Bitcoin holdings. Then I think you're right that you have this kind of rotation trade going on right now where just liquidity is getting sucked up out of other places into SpaceX, Anthropic, OpenAI, IPOs. The other thing you have is quantum. Do you want to talk a little bit about what happened this week on the quantum side?
Yeah, there was an interesting public challenge which was aimed at rendering Google's result more efficient to basically compress Google's result into as few qubits and T gates as possible. And people were able to use AI models to make Google's own result much more efficient. That doesn't mean that, you can use a quantum computer to break Bitcoin, but it does mean that the difficulty of breaking ECDSA, provided you had a scaled quantum computer, the target continues to get lower. So meanwhile, the quantum stocks are doing well. Quantinuum, one of the top names in the industry, IPO'd today. So the stocks are trading as if, a commercially relevant quantum computer is not that far away.
It's kind of crazy. So we're talking about 2 university students with AI agents that almost reverse engineered this Google paper, right? Not fully, but it's pretty insane to me that you have people that are not from the domain necessarily, but were able to leverage AI in order to actually get pretty close to what these Google researchers did.
Yeah, I mean, at this point, the state of the art, the website is ecdsa.fail. The state of the art is lower and more efficient than the Google result officially.
Wild.
So when I started to get concerned about quantum, one of my hypotheses was AI is going to accelerate quantum development. It's already solving major unsolved math problems. Building a quantum computer is a math problem, and this is clear evidence that that's happening.
And this is where Bitcoin being a decentralized project kind of hurts it, right? Because if this was a corporate setting, you would say, okay, look, we need to get out there with some PR. Here's our game plan on updating to post-quantum cryptography. But we're just never going to have that in Bitcoin land. But in Ethereum land, you are seeing that.
Yeah, and I think you'll start to see even more major firms and even governments revising their deadline closer to 2029, 2030.
Yeah, just give it an update. All right, let's talk about the Clarity Act. So this week, the Senate basically rejiggered the calendar a little bit, and we've cleared the committee stage by a 15-9 partisan vote a couple weeks ago. This is going to get on the calendar here. I don't think we have a date yet, but the knives are out. I mean, so Jamie Dimon gave a interview last Friday. He had some very strong words against Brian Armstrong. Said he was full of an expletive, which pretty aggressive to have publicly traded company going after another publicly traded CEO there. This drew some rebuttals from Senator Cynthia Lummis. So she went on, I think it was CNBC, said that Jamie Dimon either hasn't read the bill or he deliberately wants to mislead people. Bank lobby, they're fighting hard here.
Yeah, and the craziest thing is this happened with money market funds, and none of the critics' greatest fears came true there.
No.
And stablecoins are not really that different. I mean, frankly, I think they're even less threatening than a money market fund because the yield cannot be passed through under current interpretation. So I really, really do not understand the fear here.
Well, you get it from Jamie Dimon's perspective because any yield is bad for them. I mean, they have to live in a world where banks have a monopoly on yield, and I don't think they should.
Elsewhere in regulation, Coinbase and Kalshi began offering perpetual crypto futures to U.S. investors this week. That's the first time perps are going to trade through domestic regulated venues following CFTC approval.
So that's good. I just don't think that they'll be as popular from a retail perspective as people think because you can't get the leverage onshore. All the action in the perps market is offshore.
The SEC has registered Paxos' settlement arm as a clearing agency, making Paxos' securities settlement company the first blockchain-native firm to win the designation and putting it in the same category as the DTCC.
Pretty good. I mean, these guys have been at it for a long time. You got to give Chad and everyone over at Paxos a lot of credit there.
Galaxy has launched OTC trading for prediction markets. So this is kind of part of the institutionalization of prediction markets we thought would happen. So now hedge funds and family offices can take positions on Kalshi and Polymarket contracts at sizes unavailable through the retail interfaces. So they opened with the $10 million trade for Arca, crypto native hedge fund tied to the passage of Clarity.
Don't you think it'll be interesting? I could almost see a structured products desk at a bank, or maybe a crypto native like Galaxy, putting together packages for hedge funds saying, all right, this is the DEM sweep basket, and there's 5 underlying prediction market contracts. Maybe you have some equities in there, but it's almost like a thematic way to play a macro theme.
Yeah, I think the challenge is going to be I think this product should exist. I think the challenge is actually to do the vetting and make sure the market's not going to resolve in a weird way.
Yeah.
So maybe that's why you would want there to be kind of institutions sitting between you and the prediction market.
Well, I guess that's the question is, are these based off of Polymarket and Kalshi? Could we end up in a world where this is almost like a bilateral market where you're defining contract specs? Probably not as efficient that way, but yeah, if you had some resolution entity that ultimately could clear and settle the trades on the back end, that could be interesting. I noticed that Robinhood went live with a Rothera this week on some World Cup trading. So Robinhood kind of moving away probably from Kalshi is kind of what I read into that.
So there's an interesting piece of news this week, which is something we thought would happen. Surprised it hadn't happened yet. Treasury designated Nobidex, that's Iran's largest digital asset exchange, and 3 other Iranian digital asset exchanges. So they've been sanctioned, and it's weird that they weren't before. So we knew that there was a robust crypto exchange environment in Iran, specifically Nobidex. They hadn't been designated by Treasury previously. I have some theories as to why, but now, as part of Operation Economic Fury, it's called, the Treasury has cracked down on them.
So your theory is that the U.S. government wanted retail Iranians to be able to get out of their local currency and into dollars or into Bitcoin and ETH?
Yeah, I thought Treasury was leaving this valve open to put pressure on the real. I guess the decision that was made ultimately was, well, this is benefiting the IRGC too much because they too have access to these rails.
I'll give you another theory, is that the intelligence agencies were on the inside here and had full visibility into a lot of bad guys and where they were and from an IP location. So
and it could have also been a honeypot type situation. Besant this week suggested that they had seized $1 billion in crypto assets from Iran. We saw the $323 million seizure of Tether. That means that there's another $600 million somewhere that they've also seized. So it could have been that they were just waiting to collect information, connect the on-chain dots to individuals, and then done a big seizure and also a designation at the exchanges.
There's your strategic reserve right there. Just keep on collecting. They keep on saying they're going to do something on strategic reserve here.
They do keep rumoring that. I don't know what form it would take.
Besant had a pretty fiery congressional testimony this week, huh?
Yeah, he said that on the record, he said that he had threatened to kick Pulte's ass.
Oh, I didn't even see that. He had some choice remarks towards Senator Wyden this week as well.
Coinbase has launched Base MCP. This is a tool that lets AI agents on the Base network conduct on-chain transactions like trading and lending.
Interesting. Do you see Schwab came out? They said they're targeting a mid-2027 launch of crypto spot trading, custody, and transfers for RIAs. So Schwab is one of the largest RIA custodians out there. And this would be a very meaningful development, I think, for the institutional market to have RIAs on Schwab able to hold cryptocurrencies for their customers. A lot of these advisors don't make any money off of their customers right now that hold crypto. They hold it away on Coinbase and other places. But to be able to bring that in-house, I think would probably open up SMAs, a bunch of stuff for Schwab. So it's a very smart move. Kind of surprised they haven't done it already.
Yeah, late but welcome development. Did you see this Andrew Left? He was actually convicted of securities fraud, one of the world's most prominent short sellers.
Yeah. So, I mean, it looks like some of these things weren't great, right? He was making some public statements that were definitely misleading, but like not all of them. He's facing 20 years for something that I think is that's kind of tough. I mean, definitely looks like he did some things wrong, but the jury came down against him.
So this was his firm was at Citron Research.
Citron Research, yeah.
Yeah. So it seems that he was convicted on multiple counts of kind of using his Twitter feed, frankly, to manipulate stocks. So he would say things like, "Oh, I'm going long this stock. It's a long-term hold," and then he would exit shortly thereafter. I mean, I guess you shouldn't do that, really.
Yeah, that's not.
So you shouldn't really lie. And then the same on the short side. It is a little concerning, though. I mean, you have to balance the law with pragmatism, and if what he's doing is illegal, then basically everything I see on crypto Twitter and FinTwit is legal. Also,
for sure.
So, and also I think short sellers serve a quite useful purpose. Now, you still have to be truthful in your statements and things like that, but I think it's quite good for markets that short sellers exist.
Yeah, I think it is quite good. Obviously, you need to be truthful, and you can't be misleading and saying you're holding something when you're dumping it. But I was really surprised at the length of that sentence.
MasterCard, Visa, and Stripe are reportedly among the backers of a soon-to-launch stablecoin platform. This is CoinDesk's report. Landed the same day MasterCard said they would add stablecoin options to their settlement network.
That's interesting. Going to be very curious to see what happens with that. There's a big play to be had there for sure. But MasterCard, Visa, and Stripe all kind of getting on board with the same platform could drive some standardization.
Yeah, I mean, I think those are the three most important Web 2 payments firms in the stablecoin space right now.
Yeah, I'm very interested to see what that scheme looks like. I think this is a lot of people would look at stablecoins and say this could drive a lot of disruption, but these guys are the ones that have the network effect already. And so if they get behind something, look out.
Yep.
All right, I think that is it for the week. What do you foresee for the next week here in MicroStrategy and Bitcoin land?
My best guess is that actually Saylor tries to restore confidence in STRC. And he's got a lot of levers he can pull, And people always think, and I've been guilty of this too, that Saylor is going to, finally face the music or whatever. But he's always found a way to wriggle out of each jam he's found himself in. And so I think he still has some things that he can do to restore confidence in STRC. And I think since STRC really is the whole franchise right now, he is going to try and protect the peg there.
All right, we will see. Everybody have a safe and healthy weekend, and we will see you on Monday.